Also, guys, so it's been a while since we did a lesson. This is your boy Kitepe FX at Kitepe FX Capital Link. Okay, guys. So what I'm gonna do quickly now is we're just going to jump into the charts, and I want us to look at God and see what are we to expect on God and in the next coming few weeks. Okay. So remember, we're starting top-down analysis. This is a monthly time frame. So on the monthly time frame, what we want to mark up here is our highest point, the highest point that we had on God, and the lowest point that we had on God. Okay, and this can actually help us to be able to understand and find areas in the markets where we can be able to enter from and just be able to know exactly what we're looking for. So this is very interesting. I like how the previous month closed on God. This is a very nice candlestick price action that we saw here on God. So you can see this is a pin bar. Okay, so this simply shows that price at some point came to this low. Okay, came to this low and then was pushed back up by the buyers. So right at this point, I can see that the buyers are really much in control from the monthly time frame. You can see with how the structure is. Plus, with our way of trading, we see that we had an impulse, okay, up until the highest point, and then we had a correction. So what do we expect to happen? So impulse, correction, and then we are looking for a continuation. Okay, guys. So just those two points, they are very strong points right there that I feel like are very, very solid and important to look at. So right now, what we'll be looking for God to do is obviously go to that high. Mind you, we are looking at the monthly time frame. So we expecting God to go to that high. And already here, what we can see is, remember, we trading patterns, structures, in patterns within patterns. Okay. So on the monthly time frame, even though this price action is not very clear, but you can see the pattern that we are having here is that sort of a pattern. Okay, we're going to avoid that high and then we'll put it there. Okay, so this looks like an expanding triangle. Okay, on the monthly time frame, and then what I'll do is I'll go to the weekly time frame. Say 1 week, 1 week. Say 1 week. Okay, so we are doing top-down analysis, guys. So as we start to go down to the much smaller time frame, we can see what is happening. And already we've seen that what is our focus? Our main focus is looking at this structure here. And now what our bias is more bullish than bearish, okay? Because of the way the structure, excuse me, because of the way the structure is on the monthly time frame, we are moving down to smaller time frame to just be able to find entries and the overall market direction, and to be able to readjust our patterns and structures. Okay, so this is what we're looking at now. This is on the weekly time frame. So on the weekly time frame already, I can see we had that impulse move nicely. You saw how the monthly candle closed. It closed as a pin bar. Okay, so we had that nice push. That was from the previous month. Okay, the monthly time frame. Okay, so this is, remember, from a monthly time frame to a weekly time frame. So how many candlesticks do you need to complete a month? You need 4 candlesticks to complete a month. Okay, so that's what you need, 4 candlesticks to complete a month. So this 1, 2, 3, 4 that completed the previous month. Okay, so now here we're trying to, 1, 2, 3, 4. Yep, that's it. So here now we are trying to actually understand and find areas of value, but already we've got our markups for our lowest point there and our highest point. Okay, so we are going to go to the daily. So it's 1 day, the daily time frame. So we're looking at the structure and how the structure has formed over time, okay, on the daily time frame. I like how this expanding triangle is just coming out nicely as you go to much smaller time frame. So now we're on the daily. You can see we had that rejection, then we've been having an impulse, and then more of a continuation to the upside, because already we've seen what we are expecting now here is a breakout of this structure here, or we might possibly get a touch there. Might get a touch there, and then probably bounce back. If possibly we bounce back, maybe we might bounce back. But at this point, I don't really see much of price selling back to that level because of what has previously happened. Look at, we had an arc here, a mini double bottom, we bought, okay, and then price came back, created now a solid double bottom. In this case, I can say a triple bottom, and then we bought, okay. So I feel like for price to really complete this triple bottom here, we need to create a high that is higher than this, okay. So you get my point, guys. So what I'm saying is, for us to complete this double bottom here or triple bottom here, price needs to create a high that is higher than this. So in this case, we might be looking at a possible 90% correction, okay, on this structure, okay, from where the correction started. So we might be looking at a possible move to these areas here. And then obviously from those areas, we might maybe get a much bigger correction, and then we can come and break that high. Okay, but as long as if we are not going to be able to break that high, we might be able to correct a little bit down. But at this point, this is what I think we can be looking for, is a continuation, a break above this structure here. So let's do this. Okay, guys. So right now, we might be looking for a break above this structure here, a break above this high, okay? A break above that high will be very good. And then we can go all the way up there, because then there's nothing to really like obstruct us from there. But I like how this structure and this price action is, looking at the way this price action is, in a sense that we've had a triple bottom and a very good bullish momentum. Okay, and as we go deeper here, also what I can notice is this level here. I can notice this level here, guys. It's a very strong resistance level. But once when we break that level, I believe that we are going to come to this level here. We're going to come to this level as our second strong resistance level. If we break that level, depending with how we break that level, and it will be very good. Okay, so looking at the way this structure is, I would like to jump into the 4-hour time frame so that we can be able to see if either there are any good opportunities for entries. Okay, because right now even on the daily time frame, I can show you where we had entries here. So we had entries at this area here. We had entries at this area here. There's a flag there. There was a flag here. There was a flag there, much steeper flag. There was a flag there. Okay. Okay. So those were entry levels, okay, for this price. So here, I believe what we are having is a flag, okay, and then we're gonna have a continuation. So I'm sure that there is some more possibility and a possible outcome that we might expect to see there. Very solid one. Very solid one. So what we're gonna do is I'm just gonna quickly I'll go to the 4-hour time frame so we can be able to look at those levels that I just marked up, guys, to see clearly what kind of, you see entries, the entries we were having. Can you see the entries that we've been having? So we had entry there, entry there, entry there. But this was a very good trade, which one could have taken advantage of if you entered from this level. I remember, I think some point I had seen this rejection here, but I wasn't able to take advantage of it, but previously this price action was very clear also and very solid. As you can see, the pattern that was there. These are the patterns we'll be looking for, and these are the patterns we'll be trading. Yeah. So here, we're in a very, very good trend, guys. Look at that. Very nice continuation patterns. It's a very nice continuation pattern. Though I would say this here was a bit tricky because this could affect out a lot of people into selling the market. Okay. I mean, it could still have sold it. I mean, on the 4-hour, this is 4-hour time frame. If you look at this, I mean, from here to there, it's already about 22 points, 22 points. That's on gold. It's a lot, depending with your risk, that your risk your risk ratio reward that you're using. Either you're using 1 to 3 or 1 to 2, but I think the best risk ratio reward is the one that's 3 to 1. I mean, yeah, 3 to 1 is better because it helps you in a sense that 3 losses, I mean, if you can have 3 losses and just have one win, you'll be at break even. Okay, so that is why a 3 to 1 risk ratio reward is good. So you have to look at those things every time you're entering a position. You need to be able to look at your risk ratio reward and stick to your risk ratio reward. If it's 3 to 1, and you stick to that. If you've got a setup that doesn't give you 3 to 1, unfortunately, you don't have to take it, because that means it's not within your trading plan. Okay. And also, it's very, very important to maintain a certain position sizing. Okay, so what I mean is you need to be able to maintain at least the same lot size for like a week or a month, depending with how consistently you are moving, because that would help you to really cut on your losses. Because one of the most challenging thing I've seen and I've come across and I've experienced myself as well is that you'd make good profits on a certain particular size of lot size, and then you take a loss on a bigger lot size, so you lose all your profits that you made because you took a bigger lot size. So that is why I strongly feel like it's better to always stick to at least a same lot size for certain particular time up until you are able to find your grounds. Okay, so right now what I can see on gold is that this is on the 4-hour time frame, guys. So on the 4-hour time frame, what I can see on gold that is very, very evident is that we are now correcting. Okay, this is a retracement. We've just had an impulse correction. We need a continuation. Remember, guys, if you entered at this area here at the break of that structure, okay, that was your entry, stop loss below, and we are targeting. This trade will be very, very tricky, and you know, at this level, though I would say this is not a very good area to enter from because of the resistance level that we have there, because the resistance is very strong and in price previously. So you can see that price previously you can see that price previously so price previously broke, previously reversed from that level. Okay, but I strongly believe that at this particular time we might be able to break that level and continue to the upside. So you might want to be a little bit conservative with your entry and your positioning there. But for me, I personally see that is a very good area as well. And stop loss about 15 points, and your TP 63 points. It's a very, very good risk ratio reward there, guys. Very, very good risk ratio reward. And for this trade, would be actually targeting that. So this is one of those positions that you could be involved in and hold it for like 2 days, 3 days. You don't need to rush to close your trade. So you can be just trailing your stop. Okay, but once we break this level, or if price bounces back off, we're going to move this to break even, so you'll be protecting your capital there. The most important thing I've also realized is you need to be able to protect your capital first before you think of your profits. You need to protect what you have because you don't know what you're going to make or what you're going to lose. So I can clearly see how good this structure is. This is more of a steep flag, very, very steep flag. Okay, and if we can take this price here, we can take this price right here. There's the entry was there. If we take this price here, we take this price here, we put it there. You see, guys, it makes sense that we're looking for a break above that structure. So this is what we're actually going to be looking at on gold. This is a very, very good structure. It's a very, very good price action. Okay, and you can see we've got so many patterns within this structure as well. But I would also like you to keep in mind that looking at this structure, this is actually an ascending channel. Okay, so what we have here is we've got an ascending channel, which is also 90% corrective. Okay, it's 80% corrective. It's completely a corrective ascending channel, and which makes it very, very tricky because we might sell at some point. Maybe we might sell when we hit this level here because of how correctively this ascending channel is. It's moving upwards, but it's very corrective. Okay, so that's just one key point that I would like to say. You need to be very, very conscious with your buy positions because this now looks like this is much of a correction, and we might possibly sell at these levels or we might break that level. So you just need to be conscious on that part, okay, because of how corrective this structure is, and it's an ascending channel. Okay, and if we can go to the 15 minutes as well, you'll see the kind of opportunities we've had in this trade. Okay, so look at all these were entries. So this is what? This is a flag. Sometimes the flags won't be picture perfect, but look at that impulse, correction, continuation, and then we dropped almost to the entry before we could make another high. Okay, so at this point, if you had entered this trade and you were trying to manage it, okay, this area you were supposed to get out. If you were in this trade and then the trade broke this low here, okay, if you was in this trade, you were supposed to get out the moment the trade breaks that low, that level there, because it shows that it's reversing. Because you don't want to be in these massive profits and then next to be stopped out on break even. I mean, it doesn't just make sense. But you could have also understood what structure is this. What structure is this? This is an expanding. Okay, not an expanding. This is much of a bigger flag. Okay, but not the one you would really get involved in, because this is very difficult. Even I myself, I would not trade this. It's very just too complicated, because it's giving you so many thoughts. You want to think what is really happening, you know, and it's not good. You want to make things simple and simplified. So, but this I would be able to get involved once when we break that high, we break the flag, the break of the flag. That's where you put your entry, put an end, you can put a buy limit there, and then you get involved in that trade. Okay, so guys, that was it on gold. I think that's what I see on gold right now. Was my analysis on gold. At this particular time, though, what I would suggest is to remain to have a neutral bias. At least you have a neutral bias because of how the structure is. We might possibly break this high here, this zone. We might break it, or we might. Or this is another scenario that I think might be possible. We might come to this level, create a double top, okay, and then sell. So those two things, you might be able to be on the lookout for those two things. Those are two possible scenarios. It's either we make a double top, or if we don't make a double top, we break above, continuation, correction, and then continuation, okay? So we might be able to be looking at those areas, those two things to take place. If we break and then make a correction there, then a continuation, that would be good. Or other than that, we might make a double top and then we might sell. Okay, so that was it, guys, for me. JPFX. We'll try to post another video, you know, with another lesson and on another pair and see what my analysis is and my focusing on that particular pair. Okay, but this was it for me on gold. Remember, this is not a signal or any